Hi everyone, good afternoon to you. I'd like to welcome you to the important webinar organized by Bartleet Religare Securities. The title is Paradigm Shift, Navigating the Paradigm Shift, and we have a very eminent panel led by State Minister for Money, Capital Markets and Public Enterprises Reform, Mr. Ajith Nivard Cabraal, and three hands-on business leaders, I would say, Krishan Balendra, Chairman of John Keels Holdings, Jonathan Allers, MD, CEO of HNB, and Sarath Ganegoda, Executive Director from Hayleys PLC. I'd like to thank the clients of Bartleet Religare for sharing some of their pre-session questions, and we will also have Q&A after the presentation, so I like to make it interactive. And we would like to, if the minister is ready, we would like to invite State Minister Cabraal to make his speech, after which we'll go for individual company presentations, and then I will have some questions to the panelists, and then we will also entertain some questions from the participants, and provided there is enough time. So on behalf of Bartleet Religare, I'd like to invite the State Minister. And thank you very much, Nivard, for making time. And I hope you will be able to spend most of your time with the rest of the participants as well. Over to Nivard to make your own speech. After that, we'll have an interactive session.
Nista, I'm just wondering whether you want me to make a speech or whether you have sent some questions to me on the navigating the paradigm shift. Do you want to tackle those so that it will be helpful, or how do you want? I think you have heard quite a bit of
maybe maybe you can just maybe make some initial observations, and then we'll take on for some questions. Because after your presentation, there'll be company presentations.
Okay, I think that makes sense. As you know, much has been said already about the budget as well as what it entails. So already there are many discussions are going on. I'm right now talking to you from Parliament because the budget debate is on. So I thought it's best that we tackle the situation with regard to the questions that have been sent and what I had received here, if that is representative of the type of questions that are generally being addressed. I think that would be helpful. Nista.
Yes.
Yeah, I think the first question is, would government consider floating a part of SOE equity in the CSE? The answer is right now we have no such intention. And as you know, we do not have privatization as part of the overall agenda of the government. So I think the answer to that would be no. What are your plans to encourage debt listings in the CSE? We would certainly like to see a lot of debt listings coming to the market. In many other countries, the stock exchanges actually have a large number of debt listings, which unfortunately Sri Lanka does not have. In 2014, at the time that I was the governor, I think we encouraged a lot of the companies to have debt listings, and some of them did. But unfortunately, that trend did not continue at the same pace. And today we do not have such listings as much as we should. So we would definitely like to encourage a lot more debt listings. And debt listings actually bring stability to those organizations as well. And we would like to see that happening. Number three, on capital markets was even previous budgets have tried to lure capital market investments through tax incentives, but have failed to make an impact. Will the new incentives be sufficient to see growth in new listings? Actually, we have thought out of the box and provided certain incentives which are quite different to what has been ever done. For example, investments in the stock exchange being able to qualify for the investment relief, the very low interest rates that we are having now. We have also provided the guidance to the SEC and the stock exchange that they should also list new types of companies, the SME sector, the BOI sector, the REITs, So we're confident that the number of 500 companies should be attainable, and also that the path of around 75% of GDP being the total market cap would also be attainable. We would like to see that happening, and I'm confident that with constant guidance and regular monitoring, we should be able to achieve that kind of a goal. There were a few
Our,
other questions on the budget proposals. Would you like to tackle those as well?
no, Nivard, no, Nivard, I'll take, I have few questions on the
Okay.
first three. I know you mentioned about SOEs not being listed. Uh, I mean, there is people in the private sector see a lot of economic rational basis for this. One is, are you sort of blanketly saying no? We had in the past, Sri Lankan catering was almost prepared for a listing. What about listing some of the instruments of the state-owned SOEs? I see NDB raising bonds, NSP raising bonds, Bank of Ceylon debentures anyway is already instrument is listed. The reason is about in terms of governance, disclosure, transparency. I think listing is not merely equity, at least instrument. Can we start with instruments at least?
Nista, we are also making arrangements to have at least 500 companies listed. So I think if the state does it, there is going to be a huge discussion around it. At the moment, why doesn't the private sector like to list? So, there is so much of interest in this public sector. We are saying, look, we are giving you so much incentives for you to do it yourself. And the government has a policy, which the government has also given to the people, and the people have endorsed that policy. So I don't want to depart from that and then
Okay.
say we are going to list. But instruments, certainly, if there are instruments that we can list without disturbing the overall policy, we would be certainly happy to look at that. But we're giving all the incentives to the private sector to list their instruments, to list their companies. And I think there's so many companies that we have in Sri Lanka which qualify for listing. And I think they must also do that, and we'll help them to do that as well.
Okay, thank you. You can move on to the other questions, Nivard.
Yeah, thank you, Nista. It says, while this budget has addressed the policy inconsistencies that have prevailed in previous budgets, implementation is another key factor to address. How do you expect to address proper implementation of these proposals? Yes, we have a budget monitoring process that we have put in place. Actually, that budget monitoring and project monitoring comes under my ministry's purview, which we would be taking very seriously. And I believe if we consistently keep a close tab on the implementation, there would be a fairly deep-rooted implementation network that will occur in our country, and we actually want to get that going. And I'm sure that you would see in the next few months and quarters that there would be a lot of focus on the implementation. The additional 2 rupees for remittances, how does it work and who bears the cost? Well, when remittances come into Sri Lanka, the banks will give the rates to the people who are remitting this money. So there will be a exchange rate. And over and above those exchange rates, provided this money is coming into the country through the normal sources, they would qualify for a further 2 rupees as well, which the government would bear. And the government has allocated funds for that. So that's additional incentive to provide the money to come through the normal channels, because we are very keen to see that the money is coming through the official channels, so that there will be additional new money coming into the country from foreign sources. How do you ensure that the tax exemptions increase productivity of the target industries? Well, that's a matter of monitoring, and we would be doing that through the budget monitoring process. Will efficient tax collection methods alone be sufficient to raise government revenue given the current dire fiscal situation of the country? Well, no, we are not only relying on that. We are relying, of course, on the improvement of the tax administration, and that's why you would have seen many provisions in the budget that specifies that. But in addition, we have also brought in the 0.25% taxation on the turnover of companies, which will be also a very helpful inflow that is coming in. And in addition to that, the new features like the 1% tax on new incomes that would be also coming into the mainstream of the tax net would be helpful, and those will also be helpful in bringing the revenues up. One of the key areas would be that in the case of excise, we are bringing in the new methods which have been proven all over the world as being able to derive greater amount of revenues, and those will be also there. And the current estimates is that we could rake in at least additional 40 billion rupees if we get that right. So the leakages that have been there all these years would probably be plugged very well, and then as a result we would be able to have those revenue targets achieved. Next one
Nivard,
is 7 years. Yeah, go ahead.
Nivard, on this composite GST, that new tax, when would the country know what kind of a rate that you're looking at? We were told that it will be from January, 1st of January. Between now and January, when would you decide on the rate and the mechanisms?
That's a 0.25%.
No, no,
0.25%.
I'm talking about the new tax, consolidated tax for these 5 products, the goods and
That is for the excise.
the excise and the motor vehicles and liquor and tobacco.
Yeah, motor vehicles may not arise in the near future, but in the case of the cigarettes and tobacco and the other excise items, we would be announcing that very shortly.
Will it be in the next few weeks? So there is a lot of investments to be made because telecom is also included.
Yeah, I think it would be done very, very soon, maybe before the budget is finalized on the 10th of December. And if at all, the latest would be before the 1st of January, so that these rates could come into force from that. Right. Then we are going into the next one. 7 years of tax exemption for power and energy sector. Would this be applicable for existing projects or only on new projects? It will be for the new projects, as is normal. This would be for new projects and not for the existing projects, because existing projects have already been assigned their tax background. So it will be for the new projects. Does the government look to continue with the import cess on cement imports to protect local cement manufacturers? Do you think it's reasonable from the consumer's point of view, given Sri Lanka has one of the highest construction-related costs in the region? Yes, we do have the construction costs in Sri Lanka being one of the highest in the world, and we think that that must be really brought down. So it will be a composite kind of evaluation that we would be doing, so that we can actually bring the cost of cement down for the construction projects, because the cement as well as sand as well as the other main component and steel, main components that go into the construction of civil engineering construction have been somewhat high, and we are looking at how we can manage that those items in order to bring that down quite significantly, and we are working on that. And the cement cess as well as the cess on the imports, as well as the clinker and other items that are brought in to manufacture cement, will be examined carefully to ensure that the overall cost could be brought down. And that's the idea behind the whole concept, because we definitely want to support the construction industry going forward.
Yeah, Nivard, can I interrupt you there? You know that local cement manufacturers such as Tokyo Cement have announced expansion recently, a $12 million expansion. Few other guys are also looking at it. In that context, where there is support for local production. In that context, you think will there be sort of uncertainty in terms of taxation?
Good question. We are already talking to the main cement manufacturers and trying to work this out through them, because if they can assure the entire cement availability from Sri Lankan sources, then we would be interested in maintaining a reasonable price, which can then be driven by the Sri Lankan manufacturing processes alone. We have been given certain assurances of that nature, and we are examining that very closely to to see. I've been talking too much, I think, for so many seminars.
I can imagine.
Yeah. Uh, we think that if they can assure the total supply, also assuming that the supply would increase in due course because of the number of major projects that are going to be done in Sri Lanka, then we would be inclined to adjust the tax rates to give them some kind of protection, at the same time ensuring that Sri Lanka's construction costs do not rise further than what we already have. And certainly we would endeavor to bring it down as well, because these components such as cement, sand, and steel are very useful indicators for the costs of construction. And construction industry is definitely one that we need to support quite strongly.
Yeah. One more intervention, Nivard. Can I?
Yeah, yeah, go ahead.
Yeah. Again, on the construction and cement and inputs, there is a particular proposal in the budget where they talk about government contracts. They listed a couple of government construction companies, and that they will be given government contracts, and then in that context they will look at duty-free imports of these inputs, which is sort of, that proposal is sort of contradictory to the other strategy that you're trying to encourage more Sri Lankan production.
Yeah, because right now we do not have the local construction, sorry, the local manufacturing of cement being able to satisfy the current needs. So if there are certain government projects which are already in place, the government will not find it. It will be very interesting to see the government charging uh, uh, extra duty, and then again having it back to the government itself. So it's a question of the government itself sometimes. And also what happens is the commissions that are used for the subcontract work or the supervisory contracts or the consultancy fees are dependent on the cost of the total construction. So if the total construction is escalated or enhanced by duties which the government itself is taking in, that arithmetic actually seems somewhat skewed. So that is the area that we are trying to focus on. And then we don't want to unnecessarily burden the government with those costs.
Okay.
Moody's has commented that they do not expect the budget to provide a meaningful boost to output, and it will further increase the fiscal pressure. What are your views on that? Moody's jumped the gun, in my view, and brought in that downgrade of 2 notches well before the budget could come in. Now they are stuck with it. So whatever that we would have put in the budget as being credit positive also, they need to find some loophole to say that's not a good thing. So I think that's what is happening now. And the nice thing about it is, Nista, the investors haven't followed Moody's. The first day that Moody's downgraded, investors got a little upset. And then our bonds started having very, very high yields. But very soon, once they dived into the Sri Lankan credit and examined it carefully, they found that Moody's statements were actually not with foundation. And now those have all begun to tighten much further. And today's rates actually do not belie the Moody's reactions. So I think I'm not taking Moody's seriously on this particular part, because there are so many credit positives. You have been at various seminars that I have been there. You have heard what the Sri Lankan investors have said. You have heard what the other Sri Lankan business people who have foreign links have said. So none of those actually match up with what the Moody's have said, or Moody's does not match up with what they say. So I personally see this as a kind of a statement that Moody's is compelled to make because they have to defend their position. And I actually think that's not warranted. And I'm actually somewhat sad that they have done that. This takes me back to May 2009, when these rating agencies, not Moody's, but the other 2 rating agencies, immediately after the war ended, which would have been seen as a hugely credit positive position, they downgraded Sri Lanka. And I think they're still ruining those downgrades, because that actually was completely ignored by investors, as we could see from the rates that the investors were prepared to pay for the Sri Lankan credit. And always Sri Lanka has been taken as the Sri Lankan bonds have been trading at rates which are much more benign than what the ratings reflected. And this particular time, although we did have some kind of a shock and some element of concern, it has now reversed. Sri Lanka was removed from the grey list of the International Terror Financing Watchdog FATF in October 2019. However, the proposed invitation to bring in money without any questions asked is against international anti-money laundering laws. Won't this proposal do any more harm than good? We have not said that we are not going to ask questions. We have said you can bring the money. And we have also said you can bring money which you have not declared previously. But that does not mean that the money is tainted. There could be some people who have had maybe professionals who have had income, their professional income, which they have not reflected. There may be people who have sold lands which have not been accounted for at the full value. There may be people who have sold their vehicles and not accounted at full value. We all know of that kind of instances, Nista. So we're not saying this is going to be a feature for drug money to come in or for terrorism money to come in. And that's the wrong connotation that has been given here. There is nothing like that. We have said you have to save from where you got the money. And if you have got money which you have not declared previously, that means you pay the tax of that 1% that we have been assigned. And then you can bring in that money into the mainstream of the economy, and you can make your investments and then go forward. So there's absolutely nothing that would happen with regard to the nature of the transaction. Some countries have no taxes at all. So then that doesn't mean that those countries are encouraging money laundering. Certain countries we know in the world, they have no corporate taxes. Certain countries have no taxes in certain other fields. When you say tax holiday, what does it mean? That means no tax at all, even in Sri Lanka. There are companies like that. So this source of income, we are saying, pay 1% tax. Certain sources of income will have 14% tax. Certain sources of income will have 5% tax. So like that, you can have different rates of taxation. But that doesn't mean that the money is black or the money is tainted. We are asking people to bring in their non-tainted money, and that will be the only test that would be done. So there's absolutely no danger of this going into a FATF question mark, and we are quite comfortable with that provision.
Okay.
What are the government's plans to maximize the capacity of the ports, and how will they be funded? Well, the ports, we have already done the spade work as far as the ports are concerned. The Hambantota port, of course, has a second and third phases as well, which are for the future. The Colombo port has now the possibility of developing the West Container Terminal as well. We also have spare capacity in the current ports, which also need to be supported. So I think the port activities in Sri Lanka, we have sufficient space for it to grow. The Trincomalee port also has sufficient space for growth. So the port, now what we really need to have is port-related industries. That's why the new tire factory that is going to come in the Hambantota industrial zone is going to be a very important investment. And we would be supporting that because we like to see many more investments of that nature coming in. As you know, about 400 acres of land have been allocated in that particular zone in which the new Hambantota tire factory is coming in with the Chinese investment, which was recently done. And that takes about 120 acres of land out of the 400 acres that have been already earmarked. So that's about a 1/3 usage, which we are quite happy about. And I think in the next few weeks and months, you would see some new ventures coming in, and we are working hard towards that. The developments in the port city also with the new law comes in, where those incentives are given. That would also be very useful, and we would be working on that as well. What is your outlook on interest rates? Given that more than 90% of deficit funding will come from domestic sources next year, aren't we looking at an increasing rate scenario for 2021, adding pressure on private sector credit growth, inflation, and LKR? The private sector, we are also keen to give them the facilities to make their investments. That's why you would have seen we are giving certain tax breaks. We are keeping the interest rates low. And one of our key factors would be that we would like to see the interest rates being held at current rates without allowing it to go forward. So that would be one of the key factors. So everything else would revolve around that. So if the interest rates have show any tendency of rising, we would take steps to even curtail some public sector investment at that time in order to maintain interest rates at the levels that we want to see. The key areas that we would be giving priority will be the interest rate as well as the exchange rate, because we don't want those to get into any condition which would jeopardize the macro fundamentals that we are presently having. If at all, the new provision that we have provided, where we are inviting investment to come into the to the uh, to the
markets,
markets, sorry, and into the government bonds, uh, treasury bill and bond market, would be also given that exchange rate comfort in order to ensure that the flow would continue. We would be undertaking a few road shows for that too. I've already had one or two engagements with top investors of the world. We're trying to persuade them to come in. And I think before too long, we would see in the first quarter of next year, some of those investments materializing, which would definitely be giving us the comfort that the exchange rate stability and the interest rate stability would be maintained. So with that, we are confident that even though our borrowings locally would be somewhat high, we would be able to manage the interest rates and the exchange rates at the current levels or even better. And that's something that we would give priority for in the next year. What would be the target range for policy rates, exchange rates, and inflation over the next 5-year horizon? I could take cover when I was the governor that I don't want to speak about those. I don't have that cover any longer. So I would say, subject to, I don't know what the governor would like to say about that, but being in government, I would like to see the interest rates not moving up or moving down. I think the current rates are very comfortable for both the lenders as well as to the borrowers. I think we shouldn't allow it to get any different to what it is in the near future. Maybe we should go at least 2 years with these current rates as far as the interest rates are concerned, because that would be comfortable for us. The only area that I would like to see some element of tightening is the exchange rate, because I think the exchange rate went too far at the time that the depreciation occurred with the funds moving out of Sri Lanka during the last regime. The exchange rate has gone beyond what I believe is the comfortable range. If I had been the governor, I would say it wouldn't have gone to that extent. I would have been a lot more sensitive to the exchange rate, because I know the impact it has on debt. I know the impact it has on the budget as a result of having to allocate that amount of rupees to buy the same dollars. So it's a fairly big burden, which I would like to avoid. And therefore, I would like to see the rupee gradually strengthening, because that would be one of the most important ingredients of our debt sustainability being enhanced a lot more than what people could have ever imagined. So I would like to see that sharpening somewhat. And that's something that in the next 5-year horizon, I would like to see happening. And I can also tell you, I'm serious about that. We will take the necessary policy measures to encourage that movement in the directions that we have mentioned. And I think with gradual tendencies, of course, nothing, no shocks, no sudden movements, but gradual movements are what is needed for an economy, and we would be concentrating on that. The last question that I have on this is the budget proposes to merge NBFI with their parent bank. What is the rationale behind this proposal? NBFIs that are currently under banks are well managed. Yes, I agree with that. And I personally think NBFIs which are under the banks don't need to be merged or consolidated. I would like to see those remaining as is, because those are supervised closely by the banks themselves. And I think the banks themselves would probably ensure that those NBFIs stay strong and stay viable. And at the same time, they have a different arm through which they can manage their overall lending process and transactions process, because they have a different institution that will tackle that part. And I think when the overall consolidation plan is announced, which will be tweaking the budget proposals a little bit more, I would like to see that being the thrust of the movement, where those NBFIs which are under the purview of the banks and where banks have a strong hold would be allowed to remain as independent institutions, of course, with the bank having the overall control. But the other institutions which are not under, which are standalone, we would like to see those merged so that they become much more stronger institutions, better managed, stronger, well-capitalized institutions, which can then play a proper role without the complication of having any kind of disturbance affecting them too badly. So, Nisa, what I have done is the questions that they have provided to be answered by the State Minister, I have tackled. If you have one or two other questions, I'll be happy to answer.
Yeah.
Because I must mention to you that there's a SAARC Finance Minister's Zoom meeting also going on right now. So I have a different computer there, which I'm juggling across. So if you can keep me for a little while longer only and then release me, I'll be very grateful.
Okay, I was planning to sort of get you to come back a little later because we have three.
Maybe I could do that. If I can, I had to make a little intervention about the SDGs there, and
Yes.
I'll finish with that and then
if you can
come back.
That might be useful, because I think you have been sort of fairly kind enough in terms of answering almost all the questions. So we will go back to our panelists and then we'll come back to you again. Thank you very much.
Great. Thank you, Nista. Thank you very much. You can mute this.
I think with most of the questions answered by the State Minister, it's the opportunity to talk to the private sector in terms of the outlook for 2021 in the context of the budget that was presented last week and approved as well. So we're privileged to have Krishan Balendra to start the first private sector presentation. What we will do is we will invite each of the three corporate leaders to come and make their own presentations, after which we'll take some follow-up questions. In the meantime, I invite all the webinar participants to send in their questions as well, and we'll try and accommodate as many as possible. Over to you, Krishan.
Thanks. Thanks, Nista. Can you hear me?
Yes. Go ahead, yes.
Okay. Yeah, what I thought was, since the topic was about growth for the economy and for the corporate sector, I thought instead of going into too much detail about John Keells itself, I will touch on our key businesses and show why I think there is so much growth potential in those businesses. Okay. And given businesses are some of the key industries in the country, I think it will also show the growth potential for Sri Lanka. If we can go to the next slide. Yeah. Just starting with the transport sector, just the location. I think we know enough about this. The ideal location of the country on the east-west shipping routes. If you look at this, you can see any ship going from east to west or west to east would go just south of Sri Lanka. And that would explain the tremendous growth we have seen in port activity, and also why Sri Lanka is the Colombo port is a major transshipment hub in South Asia. 80% of our volumes are transshipment volumes. And most of those, about 70% of the transshipment volumes, are bound for India. And the reason is, for the big ships that are carrying cargo for multiple countries, it is more economical to drop off the Sri Lanka, the India and South Asian cargo in Colombo than to deviate and go to an Indian port. Next slide. Yeah. Now, this is a growth chart on the number of containers handled at the Colombo port overall, not just at our terminal, but overall at the Colombo port. And it's quite remarkable that with the addition of the third terminal, CICT, that volumes have grown so substantially over the last 6 years. And this is despite freight volumes overall in the world being largely flat. So it really shows that if you have the adequate capacity in Colombo, you can have growth in volumes. And looking at this slide, I mean, we've got now a capacity with the 3 terminals of about 8 million TEUs. But Colombo is a major transshipment hub for South Asia. And as South Asia grows, India in particular, but Bangladesh and Pakistan, you can see the potential for volumes in Colombo to grow. Other transshipment ports in the region have significantly higher capacities. So Colombo can handle more capacity. It won't be an overcapacity. You can see the need over the coming years, the need to keep adding capacity for the Colombo port, and the potential is there. Next slide. Yeah. Just one slide on consumer foods. As you know, we have the Elephant House brand, and we are the market leader in carbonated soft drinks. Again, a reflection of the growth potential. Consumption per capita, number of liters, annual consumption per capita, a long way to go compared to other regional countries. Yes, these countries are more developed than Sri Lanka, but this is where Sri Lanka is heading as well. And there is significant potential for growth in this industry over the coming years. Next slide. The retail sector, supermarkets. We have the Keels supermarkets. Now, this is a slide that captures the potential of the supermarket industry, or modern trade as it is called. Here, this is the number of people per supermarket, or number of people per modern trade store. Now, yes, India and Vietnam are still behind Sri Lanka, but Sri Lanka has about 30,000 people per store. You look at the other countries in the region, just take Thailand. Now, Thailand is quite a rural economy, but despite that, you can see the modern trade density, the supermarket density. It's just 4,700 people per supermarket compared to 30,000 per supermarket in Sri Lanka. Malaysia, China, Hong Kong, again, a reflection of the significant growth potential of the modern trade industry in the country as the economy grows over the next few years. Next slide. Moving on to the leisure sector. Now, tourist arrivals in Sri Lanka. We are at about 2 million a year pre-COVID and pre the bombs last year. 2018, we had about 2.2 million tourists. But look at where we are compared to the rest of the region. Now, Sri Lanka lost 25 years because of the conflict, because of the war. And in 2008, until then, we were getting about 300 to 400,000 tourists a year. Since then, that number of 300,000 has grown to over 2 million. Now, you may think 2 million is a big number, but it's still a fraction of the other countries in the region. What is not on this slide is Bali. Just the small island of Bali got 7 million foreign tourists last year in 2019. And look at Vietnam. Vietnam had their own political problems. In 1990, they had only 200,000 tourists. In 2019, they had nearly 20 million, between 15 to 20 million tourists. So Sri Lanka's potential is immense on this front. Next slide. Number of rooms in the city. Now you think Colombo has too many hotel rooms. Yes, in the short term, we may have an overcapacity. But again, look at some cities in the region. Look at Jakarta, look at Manila. As the tourist numbers grow, as the business travel grows, there will be demand for more rooms. The business traffic will also grow as the economy grows, and tourism will be a key driver, and we have a long way to go to catch up with other cities in the region. Next slide. So it is in this context that we are looking at a large integrated development. All of you are aware of the Cinnamon Life development. It is to capture the potential for tourism, for business traffic, for the conference market in the region. Right now, Colombo does not have adequate conferencing facilities. We know that because running Cinnamon Grand and Cinnamon Lakeside, we know we don't have the ballroom capacity even for a big Indian wedding. So this is designed to capture that market, and also the mall market, tremendous potential, as you can see, for modern retail. This complex will have 5 ballrooms, 800 rooms, 2 apartment towers, an office tower, and a shopping mall, and over 2,000 car parks. It is slated for completion in about a year, although the office tower is now done, and the 2 apartment towers will be completed in the next 6 months. Next slide. Just a quick update, because there is some concern with the COVID situation. Right now, again, with this second wave, we have been impacted. But prior to that, with the lifting of the lockdown, local business improved significantly in banqueting, food and beverages, and the resorts saw good occupancy. And also we can see that the moment people are comfortable with traveling, that there is a lot of pent-up demand. Both in the Maldives and in Sri Lanka, the forward bookings for beyond February, March are stronger than what we saw last year. The Maldives also is recovering, occupancies are recovering, and we are confident that as people become confident with traveling, that we will have a strong surge in demand for travel because of the pent-up demand that we are already seeing in the form of forward bookings. Next slide. Yeah. The property sector, I thought I'll touch here as well. Now if you look at this slide, again, we think there is an oversupply of apartments in Colombo. Of course, yes, in the short term, we've had some economic shocks. We've had the Easter bombs, we've had the COVID situation. The number of new apartments annually in Sri Lanka has been about 2,000 in the last few years. But that is a growth, because prior to the last few years, we were seeing only about 300 or 400 new apartments coming into the market a year. It increased to 2,000, but still you can see the growth potential. Look at Ho Chi Minh. Yes, the population of Ho Chi Minh is larger, but you can see the number of new apartments that come into that market annually. And of course, cities like KL, we don't have Bangkok and Manila, but significantly larger than what we see in Colombo. Next slide. And with high land prices and high construction costs and the traffic problems that we have, urbanization, and with the urbanization, we expect, like all other Asian cities, that demand for apartments will keep growing in Colombo. People will want to be in more central locations. They will find apartments more affordable than houses, buying land and building houses. And just have a look at this slide, have a look at the rest of the region. The penetration living in Greater Colombo is a fraction of what it is, even compared to cities in India. Look at KL, Thailand, and this is the same. We don't have Jakarta, we don't have Manila on this slide, but it's the same story. So the potential for apartments over the next few years, we will follow the same pattern as the rest of the region. Next slide. We are seeing a pickup in demand despite the COVID situation with low interest rates, and for those reasons that I outlined. And we think REITs as well for the property market is an opportunity, and we welcome some of the incentives. Next slide. Yeah, just quickly, I have one slide on financial services. And as you know, we have Union Assurance, whose main focus is life insurance. And again, the life insurance trajectory, it has grown substantially in Sri Lanka in the last 5 years, doubling, in fact, in the last 6 years. But still, Sri Lanka is so far behind. And the way you normally measure life insurance penetration is the figure is as a percentage of GDP, and you can see how low the penetration is in the country. So we are confident that that segment as well will see significant growth. So I just wanted to touch on some of these key industries that the John Keells Group is in, which reflects the growth potential for John Keells, but also for the Sri Lankan economy. So thank you, and I'll be here for further questions.
Thank you very much, Krishan, for that. I'd like to invite Jonathan Allers to make his presentation.
Hi, good afternoon, Nista, and good afternoon, ladies and gentlemen. Can I be heard?
You're fine.
Yeah. So following on Krishan's presentation very quickly, I mean, we are coming off environment of low growth over the past couple of years. We saw interest rates picking up, which did not augur well. This posed some collection challenges for our customers, which in turn gave rise to NPAs in the banking industry, some of it which is still visible in our portfolios. And then came the unfortunate Easter Sunday attack. But then with the change of the presidency in November 2019, and then the SME debt relief scheme that came about, which kind of helped that segment, we got off to a good start. The industry got off to a good start in 2020. Again, unfortunate that in March we had to kind of wind down with the COVID impact. However, great response from Sri Lanka, led by the government, the forces, and the Ministry of Health officials, meant that we came out of it faster than most countries and faster than maybe we also expected. During that time, the banking industry was doing a tremendous amount of work with millions of customers, billions of debt relief, and trillions of moratoriums. And then this helped by about mid-May, early June for the economy to get kick-started. And we saw some good numbers, some good growth in July, August, September, until the second wave kicked in, which again was unfortunate. And we are still grappling with the situation, and we are hopeful that this would be contained during this year so that we can get off to a relatively and moderately good start in 2021. I won't go too much into the budget, which the minister has already covered, except to say that there are some interesting areas available for the banking sector to look at, in particular, to support areas like the startups, the SME, microfinance areas, to propel the agriculture, dairy, fisheries, livestock, support local production, import substitution when sort of international trade is somewhat curbed and the import restrictions in place. We've got a great opportunity with this local increase in local production to drive exports, IT becomes an increasingly important area, not only in the new normal to facilitate other businesses, but also as a very vital and important KPO, BPO hub, providing IT services globally from Sri Lanka. The minister alluded to the renewable energy strategy and the benefits that accrue to it. And this is an area we see of vital importance. The startups will be useful, so would be the various entrepreneurship schemes that would be made available for basically us to support these startups. In terms of some of the impacts from the budget, we expect the banking sector, the tax to come down from the 28% to 24%. The 0.25 insurance fund is not going to go down too well, because it will have a significant impact on the bottom line. The risk-weighted provisioning suspension, I mean, has an impact in terms of your capital adequacy, but then some of us banks are quite and more than adequately capitalized. So the real impact is we would want a rating upgrade really, because currently we are being impaired on account of the LGD at 20% and likely to see some PDs and further impairments kicking in on account of the downgrade of Moody. We need to watch and see what Fitch gets up to. The interest income was anyway tax-free, but I think they brought in capital gains as tax-free, which will be useful for those portfolios which exceed USD 100 million. Treasury guarantees to support the pharmaceutical business expansion. Cost of funds benefit in terms of as a deductible to fund startup companies, and this initiative to set up a national development bank is thinking in the right direction. And then the minister already alluded to the structure under which let's say finance companies would be encouraged to merge with finance companies, so would banks be encouraged to merge with banks, but then banks and finance companies need to be kept separately as long as they are properly governed and managed, given the different client segments, different staffing, different processes, systems, products, etc. And some of us have got a subsidiary finance companies, and we seem to be managing them quite well using a lot of the practices that we employ at the banking itself. Even on the development banking, I think what is important to notice, whilst we could have some level of concentration and have it here in the Western, we must not ignore the fact that they should continuously be available to support the requirement of the rural and grassroots sectors to make funds available at low cost, fully leveraging all the refinance schemes available provided by our various MLA and DFI institutions. Moving on, the banking sector outlook, GDP, while some of the likes of ADB, IMF, the World Bank are looking in the ranges of 3 to 5. The government budget is looking at 5.5 for the next year, going on to about a 6% growth over the coming 3 years, with IMF projecting a little under 5% going on until 2025. Interest rates, I heard the minister very keen to keep it flat for the next couple of years. Now, whilst there were valid reasons that were brought in, the normal economics of excess using the domestic funds to fund the deficit could create some pressure on the interest rates and kind of move it marginally upwards. In addition, if credit growth picks up, then this would then have further impetus to move rates up. But having said that, Rates are at unprecedented historical lows at, interbank 4.5. PLR is in 5, never seen those rates before. So even if they were to inch up marginally, it still would be more than affordable, given that a couple of years back, we were looking at rates in the region of 13 to 15% or 12 to 15 across the corporate to SME and microfinance segments. He also alluded to being very keen to keep the exchange rates stable in order to keep government borrowing, foreign currency borrowing at stable rates, etc. Could put pressure on, let's say, exports, in terms of incentivizing exports as well as making imports affordable at these rates. So those are areas that need to be watched. The focus should be really more than the dollar rupee, should be the focus on driving more dollars and increasing your coffers. And I'm sure this would be a priority for the government. Credit growth likely to be moderate in the first half and could pick up, all depending on how we get out of the current second wave that we are in right now. Asset quality has been and will continue to be under pressure, especially next year. We would need to see, once the moratoriums come to an end, those entities and industries that are able to start repayments, and which are those areas that would really need to continue to be supported. Fee income will kind of follow the interest rate direction depending on the available opportunities. As we speak now, with the import restrictions, there's less fees in imports, less projects, so less on the guarantee side. Once the tourists start coming and the economy gets close to normalcy, you'll see bank fee income driving upwards. What we need is consistent taxation, and we are hopeful that this is something that will prevail over the coming years, contrary to some of the ad hoc taxes we saw in the recent past. Just a very quick digression here. In challenging times, now this is a slide you would see under any circumstances, but I think it's important as investors who are logged on to this call, when you analyze your companies, you look at companies, particularly in challenging environments like today, in an economy like today with limited opportunities, the clarity of vision and looking at these long-term sustainable planning and strategies of organizations become even more critical. Decision making, and then you ask the question, the execution of the budget becomes important. Otherwise, they tend to remain just mere discussions. The value addition comes with the execution. We have recently seen many articles in the newspapers in terms of the cost of procrastination. And this is something, again, which can cost billions and millions to corporates and governments. And here we need to, if we get the right decision, we execute and we just continue to implement without delay. Governance is in focus, and it's so important. And you alluded to the importance that listing brings into governance. And governance is not mere lip service and writing articles, but it's about practicing it and ability to actually exercising it. Prioritizing, sometimes we are weak in trying to chew too much, and in this we get diluted and do not get the maximum value. Meeting budgets, costs and timelines becomes important. I said in these times you need a positive mindset, a can-do attitude in this new norm, in these extraordinary times. My final slide is more in terms of HNB. Continues its Everest transformation project. In there lies right on top the focus of managing its asset quality, maintaining liquidity in these times, driving digital in the new norm, growing fee income with available opportunities. Costs need to be managed with top lines, they are being under pressure. Technology enhancements will continue to support the future growth of the organization, but above all, developing our people in order to make them future ready to take HNB forward remains paramount, so that we are able to provide all our stakeholders with the required returns, with people who are capable of delivering them. Thanks very much, Nista.
Thank you, Jonathan. Our last panelist is Sarath Ganegoda from Hayleys, and then we'll take some questions thereafter.
Thank you, Nista. Good afternoon to all. My presentation, Nista, is approach is a bit different to Krishan and Jonathan. As you requested, I'll confine it to the performance of Hayleys and the outlook for sectors. I believe it is more appropriate, Nista, because our activities, if you look at, they cut across most of the important sectors of the economy, namely agriculture, manufacturing, construction, transportation, and our latest addition, consumer durable retail. So all these sectors are important sectors of the economy, and we believe that performance of these things would be a good barometer for the effectiveness of the policies, fiscal and otherwise, and is a good barometer of the economy of the country. So if you look at some high-level numbers, it's over 1 billion turnover. It's the largest turnover in any of the listed companies in the Colombo boards, and one of the largest employers in the country with well over 31,000 employees, and a good number of these in plantations. And we account for about 3.2% of export income of the country. Then 5% global demand for household and industrial gloves and the products, as you know, is one of the largest players in the global glove industry. Leader in Sri Lanka's transportation logistics industry, and we are the largest third-party logistics provider in the country. Then the world's largest producer of coconut shell-based activated carbon. They are #1 in the world. Then we are the largest manufacturer and supplier of consumer durables. Singer is not only a retailer, they also have a strong manufacturing base. Then we generate 3.6% and 3.9% of Sri Lanka's tea and rubber output, respectively. And we own 2 RPCs, regional plantation companies, and we manage 1 company for the plantations. So you can see that our activities are into about 12 verticals. You can see it's well diversified, and as the head of the strategy unit, it's my business to ensure that we have a balanced portfolio of investments. When I say balanced, it's balanced in terms of risk, return and growth. And we also have aligned this portfolio of investments with short, medium and long-term direction of the group. When I say short-term, it's essentially driving the profitability and liquidity of the group, and medium to long-term to ensure its stability and growth. So that's how we have aligned these 12 verticals with the objectives of the company. So Nisa, you can see how we have performed during the first 6 months amidst a lot of challenges with lockdowns, with curfews and all these things. We can see that our export sector have performed very well. And we see that this trend would continue in the short term, and these incentives going to this sector is very welcome. And I must acknowledge the support given to us by the BOI, Export Development Board, and port personnel, and all of them, because without them, we wouldn't have achieved this. So I'm sure it's not only for us that all the exporters and manufacturers of this country have got this support. So it's not only exports. Nesta, if you look at even construction, that is construction material for the local industry. Then if you look at consumer and retail, this is Singer largely, that we managed to keep our showrooms open and managed to keep the economy going. You know that it's the consumption and demand that fuels an economy. So we managed to keep all these sectors going amidst all these challenges, and we thank the respective authorities for that. But then if you look at the bottom sectors, here we have a lot of challenges, especially the hospitality sector. So there, fortunately, our diverse portfolio helps us to keep this sector going. So currently we keep on fueling this sector with the support of other sectors. And unfortunately, the visibility of the outlook of this sector is very, very poor. And I'm sure Krishan too would agree on this. So this shows the performance of first 6 months of all these sectors during the last 5 years. And you can see with all the problems we had, that all these sectors have been resilient and have recorded like historical results, like, record-breaking results. And most of them highest results in the first 6 months of these sectors. When you take the last 5 years, I would say some of them during the history of their operations. So this shows, Mr., that there's a lot of potential to grow these sectors. And one may ask, how did we do this during this time with all these challenges, with lockdowns and this curfew and all these things? But here we see there's a clear shift of demand also to this part of the world. Maybe that buyers have felt that they need alternative suppliers after they experienced what happened in China, especially those who are depending on China for most of their supplies. Now look for alternative sources, and our results speak for themselves. So we'll have to capitalize on this trend, and we can do that. And the impetus given by this budget is very much welcome, and the support given by all those support organizations also very much welcome, and when we look forward to continue support of these organizations. Having said that, there are a few impediments to our growth, Nista, especially talking about this manufacturing. Setting up a manufacturing operation outside zones is risky. We have experienced that. We don't know how to do it anymore. So we have taken a decision going forward. All our expansions of manufacturing, whether it's for the export market or for inland distribution, we will confine them to zones, designated zones, either export processing zone or industrial zones. So there we see lack of facilities with adequate water supply. When I say water, it's industrial water, and effluent treatment and effluent disposal. And also we see that disposal of solid waste also a challenge. So we are addressing all these things with the relevant authorities, and I believe that these things would get sorted out, and responsible authorities will fast-track implementing the decisions and the proposals that they have presented in the budget. And there's another, I wish the minister was there. I think I expect to get an opportunity to raise this when minister rejoins. We welcome the low interest rates. They are very much welcoming and very encouraging to see the consistency in this policy and minister's assurance and reassurance that these policies would be consistent and would continue. But I hope most of you are familiar with this thin capitalization rule, and that is an impediment for growth through borrowings. because this rule restricts your deductibility of interest income. It's only up to an extent of interest you incur you can deduct. So it says it's your debt to equity should not exceed, say, 3:1 for non-manufacturing and 4:1 for manufacturing. I think we should be left to decide, management of corporate should be left to decide how we should structure our finances, how we should structure our gearing, and putting controls and restrictions on this. It's a really discouraging growth, because it's a cost. Because when you add this interest back, you'll have to pay tax at 20% and it's a cost. So I hope that this should be addressed. In fact, we made some representations, but it has not been taken into account this time. And I hope it's an oversight. So we expect to take this up. I expect to take this when Minister joins back, Nista. So yeah, basically that is it. Nista, if there are any questions later on, I'm happy to answer.
Thank you. Thank you much, Sarath. I like to get back to, in the interest of time, ask a few questions from the three panelists, and hopefully the minister will join us in between. And all the webinar participants of the Bartleet Religare Securities to share in their questions in the meantime. There are lots of questions, Krishan, to you in terms of multiple sectors, but I'll try and see whether how we'll cover a few sectors as initially. What would be the, I know you came up very optimistic about the future. What sectors would John Keels focus arising from the 2021 budget?
I think, Nista, no real change in focus. Okay. As I showed, all the businesses we think have potential, and okay, things like incentives for REITs is good for property development. We will look at the manufacturing opportunity, but it really depends on whether we can do it at scale. But no change in terms of sector focus.
Okay, fine. In the light of the port city development, and what would be the future demand for Cinnamon Life and other developments that your John Keels have embarked?
I think the Cinnamon Life development will be completed well before anything at the port city gets developed, because if you look at our apartments, we've already sold 65%. So, and the port city is going to be a high end. I think the highest end in Colombo will be the port city as the development start happening. The rest of our land bank will be more anyway targeted towards the Trizen type of market. So we think the port city will help to increase demand for property developments because it will generate economic activity.
Fine. I know you were very bullish about the property you compared with some of Southeast Asia. Theoretically, it looks promising, but I mean, given Sri Lanka's own challenges, you think particularly whether it's number of rooms, number of apartments, what would be the best course? Should we first manage what we have before adding further, approving further? I mean, I'm not saying to go come for a blanket suspension, but what would be the best way to manage this current glut in the context of there'll be some time to really achieve recovery?
Yes, I think where the hotel rooms are concerned, some kind of management of new supply, and you have seen a lot of countries doing this. It's important that you manage the new supply, because then you will make sure people who have already invested get a return. Yes. On apartments, I'm not so concerned, because if you look at the number of unsold apartments, it's a couple of thousand and it can get absorbed very quickly. But hotel rooms, depending on, I think in the short term, there will be an oversupply. But you saw that tourism chart as well. Numbers, 2 million is nothing, Mr. I mean, Bali had 7 million foreign arrivals. Okay, we need a bigger airport, we need infrastructure. But over the next 4 or 5 years, this number will grow exponentially.
Okay, fine. Just one last question before I'll come back to you, but just on the Ceylon cold stores, there is a question about, you ventured into dairy beverages. with the budget pushing on dairy, are you looking at anything further, more backward integration?
No, not for the moment. We are in so many different businesses. We'll
Okay.
continue with third-party model for the moment.
Okay, fine. And with the single plastic use of
Yeah.
single plastic, how are you managing that? Going to manage going forward?
No impact on us because it doesn't cover PET bottles and plastic containers. These are for the smaller, low in density plastic things like sachets.
Okay.
So the impact on us is minimal.
Okay, fine. Okay, I'll move on to Jonathan. Just a few questions for you. Jonathan?
Yeah,
okay, hi. Thanks for that sort of overview on the whole outlook. Just few technical questions arising from the budget. It talks about encouraging bank investment in international sovereign bonds. How do we view this, and whether it will have an impact on financial statements? Apart from this, I just want to know, government is going to rely less on tapping the international market. In that context, would you think this whole challenge of domestic financing is feasible, advisable? What would be your thoughts on that?
So for the first question, Nista, in terms of the advantage provided through risk weighting for the next 3 years, as I said, given that some of us have got a fairly decent buffer in terms of our capital adequacy, it's not too significant. And in where it really probably could hurt us is in the impairment owing to the downgrade, and that's something that would be a concern in the short term, and we'll be looking for the likes of Moody's and Fitch to take a more long-term view of Sri Lanka, and then, grade us appropriately and giving us a chance in order to work our way out of it rather than, jumping the gun this early. The second is on interest income, as I said, is already tax-free. And the new addition, the inclusion is the capital gains, which allows you to, offload some of your available for sale and then make some money. So it's welcome. Yes, we would look at possibly investing in sovereign, but then that almost then leads to the next question, which is, if anyway we are lending in rupees, in bills and bonds to propel our LAR, the requirement then for dollars would be dollar funding would be relatively less, given that in the short term, borrowing from overseas and getting dollars might be a bit of a challenge owing to this downgrade. So we would need to rely on our customer deposits and encourage our Sri Lankans overseas and others who sort of back the Sri Lankan story to continue to bring in their deposits into Sri Lanka. On the connected story on, borrowing in Sri Lanka, and I said there could be pressure on rates though, and the minister sort of kind of said he'd like to keep them as it is. I also went on to say that if credit growth picked up, that there would be a double impact on the rates itself. The preferred option is what the minister alluded to, like the $380 million coming into the Thai investment, which was announced last week. I also saw another article about another $1 billion you can expect in the next month or two. He said certain other investments will materialize in the first quarter. And that's kind of a priority. We need to keep telling our story. We need to actually get these transactions off the ground without only letting it be a story, and get the investments coming in, whether it's to the port city or whether it's down south. And then bringing in those monies, even though only 100 billion is targeted as foreign currency net increase in borrowing, we could look at a significantly higher amount in terms of foreign currency coming in terms of FDIs. This would play it will really help in addition to the minister's reassurance that in case there is a overheating domestic in terms of, lending into government, that they could reconsider some of the public investments that they have actually put in, which actually works out to almost a trillion or so for the year. If not all of them are high priorities and not going to generate inflows in the short term, then some of those could be actually pushed back in order to reduce this domestic borrowing.
Okay, fine. Just a question on the moratorium extension. We have seen it extended further, and there's indication that tourism might get extended further. I mean, how will the impairment in terms of how are you managing that challenge with multiple extensions?
Yeah.
Have you
So
given up?
Sorry, I complete it.
Have you given up planning for impairment?
So basically, the moratorium started from about April 19, right, from the Easter attack. Then we actually looked at the SME debt relief scheme from about November 2019. And then around March, Central Bank was very proactive, and immediately, as this issue came up, we got circulars to start working on it, because it was a massive exercise where the entire industry worked morning, noon, and night, and the weekends to get through with it. Now we find that what was extended up to September has gone on to March, with the likelihood of tourism being extended to September, albeit I'm quite confident that, we could actually resume tourism much earlier, God willing, vaccines being in place, and doing it in a very controlled manner, adhering to our health guidelines that have been stipulated. So what we are doing, whilst the moratoriums are taken as modifications as far as accounting is concerned, and not as reschedulements, which means that you don't have to impair. I think prudency would require banks to assess each and every customer, each and every transaction, as to, whilst you have been provided this cover, is it fair and right for you to take cover under this, and then keep them under the current bucket. So in that light, you will see the industry taking a position, and then taking an estimate, identifying certain accounts that we think even post-moratorium would have certain challenges, and you might see us staging them from 1 to 2, which will then automatically entail a higher level of impairment, which we have actually forecasted and projected for in our 2021 budget. Those that we think don't have a chance and don't have ancillary, we might actually be compelled to, forced to move them straight into the third stage, which is actually non-performing, and start looking at full impairment and other courses of action. So it's not a one size fits all. It would be based on the individual clients and their ability to service once we get back to business.
Okay, thanks. Thank you, Jonathan. I move on to Sarath. I think we were told that the minister may not come back. He's still stuck. Yeah, there's a follow-up question to your decision to confine future activities into the zones. What's the real implication? I mean, I know you had a bad experience with the products a few years ago, and what really went into this strategy or decision?
Nisa, if you take the value chain, manufacturing is the most cumbersome and least rewarding part of the value chain, and it's the most difficult to manage. There are labor issues, environmental issues you'll have to manage, and it could be like sound pollution, could be waste disposal. There are so many things to balance and manage. So what has happened, like Hayleys, most of our facilities we have set up long ago, so many decades ago, when these things, these areas, like relatively empty, virtually no residents. But
yes,
over the years, things have changed. That is again due to lack of policies.
Yeah.
And they have become residential areas, then the story is different. You see,
Okay.
it could be even a container passing, or it could be a sound or whatever. See, so we have realized after experiencing that, especially, we had a nasty experience due to no fault of ours. We were accused of polluting the environment, which had very serious repercussions. Even our buyers were questioning this. And after that, we took a decision that it has to be, if you are making serious investment, it has to be within a designated zone.
Okay.
So it's very important that, sorry.
No, fine, understood.
So it's very important that they fast-tracked this decision they have taken to set up these zones and make them available. And what we have realized, like few things, like today, if you look at the available zones, only Katunak and Biagama got water, enough industrial water and effluent treatment.
Okay.
So it's a challenge to identify a location to set up a factory today.
Okay.
So that's why I said that I hope that this would be fast-tracked. And I'm confident that they will. I'm quite confident they will, because they are so supportive of exports and manufacturing.
Okay.
Everyone does.
Yeah.
We are very impressed.
Okay. Post-budget, Sarath, what sectors would Hayleys focus on? I know there's a lot of emphasis on agriculture, exports, but any new areas, are you planning expansion within the existing core sectors, or are you also looking at new areas?
No, there's a lot of potential in these existing areas, though most of them are traditional businesses. When I say traditional, that we had been in this business for a long time, like actuator carbon, rubber gloves, fiber, etc. One expects to hit a plateau in the life cycle. After a while, you expect the growth to slow down. But what we have experienced in most of our sectors, you get new growth opportunities. And for instance, if you take fiber, one of our oldest activities, started by Charles P. Hayleys, you find today Johnson Control, which manufactures seats for Mercedes-Benz, BMW, and big, large European vehicles. They are one of our largest buyers. So even actuated carbon, from traditional purification applications, now it's going into more sophisticated applications. So even personal protection equipment, you get like more sophisticated. So we see growth opportunities in all these sectors.
Okay, fine.
So if the policies are supportive, that we can grow in these sectors.
Okay, thank you. Krishan, I'll move on to you. There are lots of questions for you, but just I'll select a few. Krishan?
Go ahead, yes.
Just on your strategy on the leisure sector, would you go divert some of the city hotels with few things coming up? Also, will you diversify into healthcare sector as a new strategy?
No, very quick answer. We are not looking at divesting the city hotels and not looking at healthcare at the moment.
Okay, fine. All right. Okay. And then what's the future of NTB going forward? With there's so much of consolidation talk, I know you will not admit, but industry feels that NTB could grow much better, faster, given from where it is right now, if it looks at a merger or an acquisition.
Again, there is no specific plans. Nista, the bank has done well in the last 20 years from one branch and no market share. It has captured a certain market share, and it has been an agile and nimble bank. We don't have some of the legacy issues. We have modern technology, sort of a young leadership team. And so for the moment, there are no specific plans. We feel we can continue like this.
Okay, fine. Just on the transportation port sector, I know ECT is spoken about. What's the current status? Has this consortium been awarded, or is just a lot of talk or ideas?
No, I think there are a lot of discussions going on at the moment. Nothing specific.
Okay. But you're basically looking forward to have a sort of expand your engagement in the Colombo port.
Yes, as you saw, as I showed in those slides, and also the ECT is right next to SAGT, so there are a lot of synergies.
Okay, fine, thanks. Before we wrap up, there are a few questions. Jonathan, I'm moving on to you.
Yeah, Nista.
Yeah, with no dividends for banks, what would be the returns for shareholders, especially with the difficult times ahead?
Economy picking up, opportunities for banks to invest in the development, share price going up, fantastic capital gains. It's right now terribly undervalued. It's going at real discounts relative to regional peers and the industries. Huge opportunity to make a gain by investing in banking stocks as we come out of this COVID, as well as the phenomenal amount of impairment we have put in. Banks should do well in the medium term.
Okay, right. Just a few budget-related questions because you're the only
Also,
bank.
Nista, the dividends is just only for this year, and it might be even confined to those who might have capital constraints. So it's not very clear in terms of whether it's 100% blanket blockade or otherwise.
Okay, fine. There was reference to this 2 rupee remittance incentive. Since you're in the remittance market, how will this help, particularly in the context that lots of Middle East returnees from Sri Lankans, from migrant workers are returning post-COVID?
I think it'll be fantastic because right now there is a lot of money that is coming in unconventional methods, not through the normal systems. You will now bring these money through the official channels, and these get recorded, and the country is aware of these monies, and the government is taking a calculated calculation here that knowing these amounts coming, it might be worth the 2 rupees that they are paying in the short term. I was glad to hear that they have made a provision for it in the budget, which means that they can absorb this 2 rupees. And then obviously when these monies come in, it will do wonders in terms of the foreign exchange coming in and help us to leverage those and do small businesses with the beneficiaries of those funds locally. Fantastic initiative.
Okay, thanks. Sarath, few questions. I want some quick answers. Sarath?
Yes, Mr.
Yeah, I mean, I'm going to list some key subsidiaries. What's the outlook, or what plans for these subsidiaries? One is Hayka PLC. What's coming up? I mean, plus Advantage.
Mr. Shall we first talk about the sectors, our export sectors, and say Hayka, the products, fiber, those.
Quick one.
We are confident that they will continue to do well.
Okay,
Yes.
okay.
Yeah, but as I said, there are few impediments. One, I said this facility to expand.
Understood.
Other one is export credit insurance. There again, what is stated in the budget is very vague, that they're talking about imposition of 1% premium. It's vague. It's not clear at all. That's another point I want to get it clarified with the minister. So subject to those, because that export credit insurance is a real thorny issue, because especially the new markets, new customers, for us to get a proper cover, it's becoming increasingly difficult. So this has to be addressed as a priority issue.
Okay.
So provided that those impediments are taken out, yeah, definitely, we'll take off in the export sector. Growth potential is immense.
Okay. I know you mentioned about your first half performance. You think there is no reason for you not to have any expectations of any change in such course? You're sure that the second half of financial year 2021 would also continue to be like this?
You may not see such like good margins perhaps, but there is no reason why it should not. Of course, the same growth trajectory may not continue, because now they are at fairly high level, but they'll continue to do well, especially with the support of the government and the those blockers I mentioned, if those things get addressed.
Okay.
Yes.
Okay, there's this one more question. What is being done with regard to Singer Sri Lanka? There's always been in the market about a part sale. Is that being pursued, or with kind of?
It's not a part sale as such, Mr. We have certain benchmarks within our company for everything, including liquidity. So liquidity, our benchmark is debt to EBITDA like 3:1. Debt not to exceed 3 times of EBITDA. So currently it's gone bit more than that. I don't want to say that it's a why, but it is too much. It is too much to our liking. See, so this we are addressing seriously. So it could not necessarily this. We perhaps there's something we may look at, but a combination of strategies. Our purpose is to address that issue. You see, our internal benchmarks, hurdle rates. So that we are addressing.
Okay. This will be the last question for you, Sarath, in terms of wage hike to the plantation sector. I know industry has, as a collective body, complained about it. How is it would be for Hayleys? Are you seriously concerned about the wage hike?
Nisa, I don't see a gap between what government wants to achieve and what we want. More they earn, happier we are. And they should earn well more than 1,000 rupees. In today's context, and if you are talking about getting out of this middle income trap and all that, this $5.50 a day, what is it? They should earn more. Issue is not that. Issue is cost per kg to the industry. You see, we'll have to balance this. So we will support the government. We will talk to them. We'll have to find a mechanism to balance this both sides, have a win-win formula. Because if you look at the productivity, Sri Lanka is 18 kg per plucker per day, whereas Kenya is 60 and India is 36, you see. So if you could drive this, if you could agree on a mechanism to drive productivity, and if you focus from our side cost per kg of our plucked leaves, it's not 1,000, if they earn even 2,000, we have no qualm. And they should earn, if you ask me.
Okay, thank you. Thank you, Sarath.
As I said, without linking to productivity, if you just make it a wage, then there are.
I understand. Thank you.
Jonathan will support the government in achieving the objectives.
Okay, right. Thanks, Sarath. Jonathan, just 2 last questions for you. Are you happy with the kind of stimulus the budget has provided for the SMEs? I know they're in a really tough time. The outlook doesn't look so great, but do you think the budget has done justice in terms of stimulating the SMEs?
For the past year or a little more, they've always showed intent, starting within a week or 2 after the new president came into place with that SME debt relief scheme. And since then, they have been focused on helping this. Even the budgets, the areas that I alluded to, which is the agriculture, livestock, dairy, as well as the startup refinancing, import substitution, local manufacturing, as well as the exports and some of the IT areas will go a long way. Even areas like this Samurdhi, small loans that are being granted at, let's say, low interest rates will help some of these guys to start some small businesses and grow this. So from that point of view, I think they are genuinely and sincerely interested in developing these areas. Even today's headline in your papers, NISTA, which is NDB commits 165 million for, let's say, SME development. All these are, actions in the right direction to support this SME and the microfinance, which is much needed for this country. It's about the economic dividend being spread right across. And that's what we need to be doing at this stage.
Okay, fine. One final question is about this interesting proposal, retirement age being increased. What kind of an impact it will have in the banking sector, at least private banking side?
I think if you look at it holistically, it's something positive. You already have banks which have retirement age at 60 or 57 and 58. So some have already gone in that direction. It's some others like us who are at 55. My observations over the last decade has been, I mean, when our staff, our executives near 55, they're prime. They're just absolutely super top class, and then they go and work somewhere else and give that 3.5 decades of experience and exposure to some other company as a consultant, or and they do really well. And a lot of ex-HNBs are doing wonderfully well in other organizations. So we are deprived of that benefit of godfathering or godmothering, or providing, a counseling, advisory, mentoring, coaching to the juniors. All that can be done, because in a large organization with many staff, just in one training unit, you cannot cover them. But if you have experienced staff, you are able to do that. So maybe the flip side might be, if we need to work the numbers, that you might have a slight overhang in terms of operating costs, because you have slightly higher expenditure. You have, on the one hand, you have maybe the pension liability growing a little bit, so the annual charge to P&L being higher. But then what you must realize is, since these guys would have been getting their pensions from 55, now they're going to get it only from 60. So there is a reduced, the longevity remains the same. So there's a reduced period in terms of, paying the pension. So all in all, I see it in terms of strengthening the industry from a knowledge perspective, retention of experience, and driving the industry. I see it as a positive.
Okay, thank you. Thank you. Krishan, I'll end the session with you. I know the second quarter numbers are very encouraging, and then we had the second wave, and there's fears about a third wave ahead. What's the kind of outlook for the retail sector and the consumer? And then do you think you will continue to maintain the momentum despite these challenges in the next few quarters?
Nista, there is an impact, obviously, with the lockdown, and in the Western province, a lot of our stores were closed. But the impact is nowhere as significant as it was in April and May, where there was a nationwide lockdown. And here the lockdown has been only for a few days. So short answer, yes, there is an impact, not as bad as April and May. And with it getting eased and the lockdowns being eased, we are again seeing the momentum come back.
Okay.
So
okay.
But there is an impact in October and early November, there is an impact.
Okay, right. Thank you. We have sort of gone beyond 15 minutes of our scheduled time. On behalf of Bartleet Religare Securities, I'd like to thank all the panelists and also the minister in his absence for finding time, as well as being very frank. I think you have given much more than the investors expected in terms of insights to the future, as well as some of the strategies, internal strategies that they are looking forward to. So thank you very much. And I'm sure some of the questions that we couldn't answer, I'm sure the Bartleet team will sort of follow it up and perhaps send it to you and get more answers. And on behalf of the organizers, let me thank you once again and have a good evening. Thank you.
Thank you.
Thank you, Nista. Thank you,
So thank you
everyone.
all.
Thanks a lot.